to me, I love finding something like it's treasure hunting, find something undiscovered. No one else wants to trust it yet. I'm like, oh yeah, I'll do that. Cause that's honestly what we did at Lear. A lot of times we weren't looking for external validation. We were using our own know-how, gut, and also network to build it up. So like I was the first institutional investor in Billy, the Dollar Shave for Women, out of Denver when they had a ton of New York connections.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Italy Vacation himself, Eric Hornung.
I had so much gelato and so much wine, Jay. I think I left Italy being 50% gelato, 50% wine, and 50% pasta because I went there as 100% of a person, but I left with a little bit extra.
I can see that.
You can see... You can see that in my face? Like, I thought it was just gut, thighs, trunk. No, you're saying in the face it even showed up.
I think the listeners can see it.
They can hear it. They can hear the excessive amounts of gelato stuck in my throat.
It's in the enunciation. No, I'm kidding. I don't see it. I just wanted to make you feel a little bit self-conscious.
No, I feel 100% self-conscious.
What was the reason for your visit?
Well, my dad, up until last year, had never left North America. And he decided to get my mom a trip to anywhere she wanted to go in the world because he was going to be adventurous. So last year we went to Greece and he absolutely loved it. It was a great family time. There's 6 of us in my family. We all went. We did Athens, Santorini, Mykonos. Fantastic time. This year, the decision was made to go to Italy. So I'm hoping it's becoming an annual thing. I'm not certain that it will be, but we went to Italy this year. And part of that was tied into the fact that my mom, her family is from Italy. So my grandma's Italian. My mom's grandfather is from a little town in Italy called Amelia, which is about an hour and a half northwest of Florence.
And you have some sort of, deity in the family, some sort of like saint?
That's what we were told. But I don't think it's a saint. I think it's the one step below a saint. We couldn't find any information on that, unfortunately. We did, however, find the birth certificate of my grandfather, which is what we went there for.
You've been saying this on the pod for a little bit. You've been saying that you had a family member who was up for sainthood, and that's proven to not be proven.
Well, it's not proven, but it's not proven. So, and I've hedged it in past episodes. I've said, allegedly, we have this thing, but the last name Silvestri is big in the town that I was in. There's a castle, Amelia Castle, which is beautiful. There's a cemetery, which has a lot of Silvestris in it that I walked around. It was pretty cool. But the town is literally dying, Jay. It's in a very weird way. I forget the exact stat, but there's under 200 people that are under 10 years old in the entire town.
Whoa. Weird. Crazy. What's the, what do you people do there for fun besides eat gelato?
Mostly we ate gelato. No.
A lot of old people, a lot of ice cream.
Yeah, it's beautiful. So do you know what Cinque Terre is in Italy?
Of course I don't know what Cinque Terre is.
Of course you don't. Great. So there's a UNESCO World Heritage Site right up the coastline from where Amelia is. It's called Cinque Terre. It's supposed to be one of the most beautiful places in Italy. It's getting super touristy now. But if you go down the coastline, you'll hit Tellaro. And then if you bend around the peninsula, you'll hit Amelia. And so it's just this beautiful, rocky, beachy, beautiful coastline in Italy. So I think if you were to stay there longer, you would go boating, you'd go to the beach, you would just have a very nice experience.
Well, speaking of very nice experience and lots of activities, our guest today is from Denver, Colorado, which is also a destination for people who like to do outdoor activities. Today we're speaking with Kate Shillo Beardsley, the managing partner of Upslope Ventures. Formerly Galvanize Ventures, Upslope is an early-stage venture capital fund that invests in startups across the country. They believe exceptional teams can originate from any location. In fact, they've invested in 10 markets now: Austin, Boulder, Boston, Denver, Los Angeles, New York, Ontario, Portland, San Francisco, and Seattle. and Upslope was founded in 2013.
We went on a hike called the Bride's March, which is, according to legend, this bride was from Tulare and she walked to Amelia to get married, which, sounds like, okay, it's a little 2-mile walk. No big deal. No, Jay, this thing was intense. There were rocks. It was a mule path. My heart rate was spiked. I had my Apple Watch on. On the way back, my brothers and I tried to run it and beat my family. They were taking a bus. So we made it in like under 30 minutes, but my heart rate was like a constant 170, 180. So I couldn't imagine walking through the 95-degree heat to get married in your wedding dress, let alone doing it in shorts and a t-shirt.
Walking up a slope, let's walk into this interview with Kate Shillo Beardsley of Upslope Ventures.
Jay, this summer we had some fantastic interns, but we were spoiled because we didn't have to do as much work. So if we wanted to hire someone, I don't even know what we would do.
It would be really hard to find the quality of interns who really just came to us this summer. I'm already thinking, how are we going to find interns like this again? If we ever want to hire a full-time employee, Eric, how are we going to find somebody that high quality?
There's probably nothing out there, to be honest.
I think you're wrong, because our friends at Integrity Power Search can help hire the best talent for your startup. They're the #1 full-stack, high-growth startup recruiting firm between the coasts, partnering with venture capitalists, private equity groups, and CEOs to build amazing teams.
That's right. Since 2012, they've successfully executed over 600 searches, and they're on track for 200 in 2019. Their clients have collectively raised over $2.5 billion with a B in venture funding, and that's still going. Still counting, Jay. They're experts in all types of areas, including SaaS, autonomous vehicles, artificial intelligence, big data, you name it, they're there if it's between the coasts.
Basically, if you're hiring, Integrity Power Search is your go-to. They are the plug, Eric, and so here's the plug for them. Go to upside.fm/integrity and learn more about how Integrity Power Search can help you with your hiring needs. Kate, welcome to the show.
Thank you for having me.
On Upside, we like to start with a background of the guest. Can you tell us about the history of Kate?
The history of Kate. I think I have an interesting background in getting in VC, which every VC who you ever interview will probably say that. But I have an English degree from Middlebury College, which is weird for being a VC. I don't have a business degree. I'm not technical. None of this makes me qualified, I would say, traditionally to be a venture capitalist. And yet I am one. I'm a partner at Upslope Ventures, formerly Galvanize Ventures. So yeah, how I got there, didn't want to be an English teacher at a private school, which was basically what I was qualified for. After graduating, worked in sports marketing for a second because I played college basketball. Thought that would be a good idea. It was like working in the movie Office Space. It's terrible. Moved to New York City, randomly got a job working as Martha Stewart's executive assistant, which we could do an entire podcast on that. She's amazing. And as cool as you see her with Snoop, she's just the best. So that was really fun and lucky. And from there, got to work with Kenny Lear in the early Huffington Post days. So I was a HuffPost employee. Also didn't have a journalism degree, so that was even adjacent. Ken and his son Ben Lear started doing some angel investing. They kind of were before I joined them in 2008. And it kind of rolled into venture. Angel investing turned into a fund in January 2010. And I didn't know what I was doing. Truthfully, Ben and Ken didn't either, but they had an exceedingly amount of confidence and know-how and had already started 2 companies. And just, we just did it like a startup. We just started figuring it out as we went. And now I'm really proud to say that that's Lear Hippo Ventures, the most active seed fund in New York, which is just amazing and also bonkers to think back to how hilarious it was when I was putting all the legal docs together and being Googling things because no way. I was I don't know what this is. And then I joined Galvanize in the early days. I was a 9th employee, started their venture fund. And I'm still managing that fund now. It's called Upslope Ventures. We separated the fund 2 years ago. And yeah, fast forward 10 years later from January 2010, I'm still in venture and early stage, early meaning idea pre-seed all the way through Series A.
Can you talk about that first move from, okay, you're working with Kenny Lair and now he's starting a venture fund. What did your role, how did it become a venture role versus supporting someone who's running a venture fund?
It's a great question. I get that a lot, especially from young women who are trying to get into venture, and they see that I went from being an executive assistant to Martha Stewart to like an EA chief of staff role to like director of operations. Those were like my official titles. But I have to say, anyone who's been at a startup or even reporting to someone like Martha Stewart in a Fortune 500 company, like there's no structure. Even with a company as structured as MSLO, Martha Stewart Living Omni Media, yeah, everyone else in the company got like an employee review, and like, what was I going to do? Marty, it's time for us to sit down and talk about me in my career. Yeah, that's not happening. It certainly happened on the fly, and I would say if I wasn't doing a good job, I would have been fired. That was evident. And that's true, I think, in those positions when you're an EA chief of staff, you're so close to that individual who's essentially, Ken was chairman of the Huffington Post. So, I mean, we'd have those discussions. He and I would, spend time, and he was excellent at being a mentor and a teacher. Martha was too. But I would say that Kenny, as the evolution of the focus on what our work was, it became evidently more clear as to what my job was going to be as we started to have a company. And the transition was honestly me just telling Ken I wanted to do something different, or at one point I hired an EA to replace the normal EA stuff, and then I kind of took on larger venture. I think that was around Fund 2 when Eric Hippo came on and we really needed some more organization, and there was just so many hours in the day. So it was just having open and candid conversations. And Kenny also is really generous. He told me at one point I could do whatever I wanted at the firm if I just, stuck with him. And I took that to heart, and he always honored it whenever I said, "Hey, remember you said I could do whatever I wanted?" And he was like, "Oh yeah, okay." And it was a sense of fun that was sort of pinned around.
So it sounds like it was more of a function of you being interested and you taking initiative and going out and starting to do things and kind of being like, well, I'm this now, and not him saying, hey, can you do this?
Yeah, I remember one day I was sitting with our accounting team, which, I had like formed essentially because we needed one. And I'm like in piles of Excel sheets, and we're like going through the financials of like the 20 companies that we owned 100% of, because someone had to, pay attention to the bottom line for those. And, it was awesome, really interesting. And he walked in and he just looked at me, he goes, "What are you doing? Like, who gave you this job?" And I was like, someone had to do it. Like, there's no one here, I mean, like things have to get done. And that's just what that environment was. So I've always operated in the context of, here's a mountain of work because we want to accomplish X goal. Just start picking away at that pile. I was always less concerned about my title, anything. I mean, I feel like when you go into roles now, most people are really aware of what salary, equity, how that's structured. I've just always been one of the only people, if not the first, on the ground floor. And I've never pushed for that out of the outset, because you just don't know what you're going to get. And it's kind of an evolution. So I'm much more of a doer and a builder than, I need to come in and be at this level and achieving this, etc.
When I think about English majors and English teachers, I generally think like structure, right? Like, these are the sticklers of grammar. Jay's parents are both teachers. One of them's an English teacher, and Jay inherited that like grammar, I'm going to critique you when you use the wrong there, sticklerism. So did you struggle at all going from this world of structure and English and basketball and regiment to moving into something that you said had no structure with Martha?
No, I realized actually when I was at Martha, I'm equally left and right-brained. I'm very creative. I almost was in double art and English major, which, would have also been useless as a degree, but fun and interesting, creative. And then I equally like structure, Excel sheets, math. So I almost get antsy if I spend too much time doing one thing. So I think the startup environment is perfect for that because you have to go back and forth between the two. Martha's equally left and right brained. And so I was able to kind of follow her in a sentence, if she would move from something obtuse to really detailed. And not only that, but like that's how I think. So it's a little bit of a blessing and a curse, especially, and that's why I think I'm well suited for early stage, because you will have to sit down and do the actual detail work, but then be able to think big picture, long term, and kind of get some creative new solutions there. So it's something I realized I was good at, and it's also my preference.
Something you said when we just started this, you kind of qualified your position and said, I don't know if I'm qualified, or I wouldn't traditionally be considered qualified to do this, which I feel is like an attitude most people we talk to in VC have. What does it even mean to be qualified for something? When would you know that you feel qualified to be in venture?
I would definitely say with a ton of confidence I'm qualified now. And I say this being how old am I? 37. I have 2 kids. I'm married. I've been doing venture for 10 years. And now when I meet people who are in venture, especially early stage, and I'm like, oh, I was one of the first investors in Venmo. People are like, holy shit, like, I was like, yeah, I've been around for a while. So that experience makes me feel more qualified. And that's something that, I remember Kenny saying all the time, where he would say, I just go off of my experience. I look back and say, well, what do I know? And that essentially is qualification enough. I think traditionally venture capital around the .com bust was men experienced in, they had technical degrees coming from MIT, Stanford, Harvard. They also had a financial background. Maybe they spent some time in private equity. It was this really interesting combination of highly, highly skilled individuals who had the years of experience and maybe even started a company themselves. And then they were qualified to be a VC. It's changed drastically now. And, I, coming from Martha Stewart Living Omni Media with my consumer background of just understanding what the female consumer wanted from that company, and sitting in these meetings with Ken and Ben, I was qualified to evaluate Birchbox and BaubleBar, some of our early investments, because the end user was a young female. And that gave me confidence around my ability to evaluate new kinds of companies that were coming through. And that was, in 2010. And honestly, a guy from MIT with an engineering degree would be like, I don't know why this is important. So I think it was a good time for me to be right place, right time.
What was your first investment? Like the one that you kind of took on and you were like, I'm all in on this?
I've got a couple. I'd say the first one I did for Ken, because it wasn't my money, was paperless posts. This was before we had a fund. And my job, along with helping him on a day-to-day basis evaluate, businesses and a number of other things that we were doing, especially this is when I was working for the Huffington Post, was to find him just cool to invest in. Literally, that's what he said. And I was like, okay, I don't know what that means. And a friend of a friend was starting paperless posts. And honestly, this was solving my own problem. Ken was an amazing advocate for political candidates, and he used to have these amazing events to try to obviously raise awareness. And we had to send out physical invitations to, 100, 200, 300 people. I used to hand address Martha's holiday cards, and I would start in October. So the plight of the admin where, hand addressing cards and invitations made no sense. So the idea of sending electronic invitations was brilliant from my perspective, because I was the one who was going to have to do it. And I remember the moment Kenny and I were standing talking to each other, and he said, yeah, we really need to do this for this event. And I was like, can we just use paperless posts? I don't want to hand address stuff. And he's like, what is that? I was like, oh, it's a friend of mine, company that they're doing. And I showed him, and the envelope opened, and it was like magical. This is like probably 2008. And that felt so much more sophisticated than Evite did at the time. Evite was a wonderful technological solution, but paperless post was beautiful. And that was where I understood the consumer product had to sit between function and desire. You wanted to obviously have that, but then someone like Martha would be more interested in using, or someone who cared about aesthetic like she did would want it to be beautiful, customizable, look like it was from their sort of brand, if you will. And this was any woman from the Upper East Side to, a boutique store looking to communicate, like Ralph Lauren or something like that. So that was something where when I showed it to him, he was like, get them in here. Like, this is amazing. I want to talk to them. And so that's where I was like, oh, okay. Like, I understand, what gets you excited. And then I was working in BetaWorks on a day-to-day basis because Ken was chairman of BetaWorks. So the environment I was in was 4 engineers, John Borthwick, Andy Weissman, who now works as a partner at Union Square. And it was like the 6 of us every day, and then Ken as well. And I was the only woman in the office and the only layman, besides Ken. So the guys who were there are now off doing some cool stuff. But, Todd Levy, who's the CTO of BuzzFeed, was the first engineer on Bitly, and Bitly came out of BetaWorks. And so this was this environment. I would go to lunch every day with these guys. They were my friends, and they honestly taught me a ton about the internet because I had no idea like what environment I was working in on a day-to-day basis. So they would also give me confidence around what was interesting from a technological perspective and what was standard, what was on the cutting edge. These guys were data scientists. Like, it was before data science was a thing.
Yeah. So catch us up to today where we are with Upslope and how you moved into Galvanize and how that became Upslope.
Sure. So I left there in February 2014, and 2 weeks later started at Galvanize. I had this idea. I'd really, with Ken and Ben and Eric, lived through the growth of the New York tech scene. It really wasn't, no one cared at all what New York was doing technologically from 2008. It was just like, there's nothing there. After, those few years, all the way through 2014, like, I remember people coming up to me and saying, oh, you work at Lyra Ventures. Like, they knew what it was. And these were people who are not, doing startups. And I was like, oh, wow, like it's become a brand, like people know. And we didn't have to pound the pavement as much for deal flow. It was all coming to us. We were on our 3rd fund and we had done 200 investments. Like, it was really, we had a team of 12. Like, it was very different than the days of basically me and a pile of stock certificates. And from that perspective, I knew I could stay. And it would be awesome. I loved the team. It was the best team. But I had this thesis of, okay, there's going to be growth pockets happening across the country. As I was visiting places like Colorado and Austin, visiting friends, like, I could see them happening. And I was like, this is going to happen all over the country. New York is going to continue to get massive. And I just saw an opportunity and honestly wanted to explore. And I was kind of done personally with New York. I'd been there for 10 years and I wanted to move. So I was looking at, where do I want to, live? And my best friend was from Denver, and she was the one who hooked me up with the Galvanize team. She was an investor. She's also my Middlebury College roommate, so I kind of owe her a lot. I will send her this podcast later and make her listen to it. But she was a limited partner in Lyra Funds, so she knew what I was doing. And she's the one who hooked me up with the Galvanize team early on. And to me, when I walked through the doors, I was like, oh, like, this is what I want from a co-working space that we don't have in New York. We had WeWork at the time, and in our companies that Lyra were working in them, but they didn't like it. And it was largely because it lacked community. And this was still kind of early days for WeWork in terms of expansion. I was taking out suites in our Soho office to just let our companies exist there. And it was brutal because I didn't want to be a landlord. It was this whole other like tiered structure of like people using desks, and I hated it. So I hooked up with Galvanize and I was like, please build one in New York. I have 200 startups in New York that will just office with you. Like, when can this happen? So that was how this conversation started. And once I got to know the team a little bit better, they had decided they wanted to raise a fund. And I was like, oh yeah, you just put this on top of your co-working structure and you're going to meet these companies and get to know them. And, it's not an incubator, it's not an accelerator, it's just familiarizing yourself with the teams. And I really liked where their plan was to be in terms of footprint, New York, San Francisco eventually, but it started out Denver, Boulder, Austin, Seattle, and Phoenix. So all these pockets that I just didn't have a network into. And I was like, I like this. I like this a lot. And so that was the strategy. So I joined them and we raised a $10.2 million fund and was just seed investing in those markets. And it was great. I think in the beginning of Galvanize, we had 30 members in Denver. I was working remotely still in New York. So it was a little bit flipped. I was telling companies in New York about our brand and they were so excited. Like, when are you moving to New York? When is the, location opening? And then by the time I changed the fund from Galvanize to Upslope, we had over 4,000 members. I couldn't keep up with the inbound emails coming in from our membership that wanted venture funding. So it worked. It just, sadly, co-working started to become, so present. I think Galvanize was like the third co-working space in 2014 in Denver. There's now like 130, which is unbelievable. So you can see how, the core brand started to stumble a little bit in terms of its offering. And that's part of the reason why it's now Upslope. We want to do more venture related activities, and Galvanize Inc. wants to focus on co-working and education, and that's totally fine.
Now that you've separated Upslope, and I'd like to hear how and why you did that, where does Upslope plant their flag to say, this is the type of companies we're looking for?
Sure. So there's a difference between a fund and a firm. And I think you'll see that when you're looking at new funds coming out that they either do one or two funds or they're on the road to becoming a firm. When we started Lear, it was an experiment, and I'm so psyched to see it be a firm now, which is really amazing. I'd like to build a firm. And that was, I think, the difference between the experiment that was Galvanize Venture Fund 1. And I always kind of knew, being the bird on the hippo, if you will, that we had $10 million. Galvanize had raised over $100 million. Obviously the focus was not venture. So it was essentially me running a small portfolio, testing out how this relationship was going to work for the long run. And my partners, Jim Dieters, co-founder of Galvanize, and Lawrence Mendez, co-founder of Galvanize, have since left to go start new businesses. And we all left with the idea that we want to continue venture investing, and Galvanize Inc. is going to continue to do co-working and education. And so at that point, it was like, obviously Galvanize Inc. owns the name. I had to change the name legally, but this is my career. I only want to do venture investing, and building funds is something I love to do. I didn't realize that, but after doing it for Lear, I was like, oh, okay, I really understand the operational background and how everything needs to flow together. Running the management company, just sort of big picture thinking. And this is what we're planning on doing, is expanding Upslope Ventures into a firm over time. Obviously, venture is a long game, so this takes some time. But that was the reason for the separation. And what we're looking for now is still early stage companies, again, from pre-seed idea through Series A across the country, especially in undeveloped markets. I know that a lot of coastal VCs are excited about these newer cities, but they're excited later. They're excited when there's probably even a large seed round put together. But when it's two people and a dog and they're trying to kind of get their wheels going, that's when they really need, especially if you're in the middle of the country and you're not as well connected, because maybe you spent years working in this other area, building that great business that's disruptive in your sector. You didn't spend your time networking in VC, networking and, these service provider connections. You're sort of new to it. And that's what I've lived through in New York. I've lived through that in Denver. And I think it's just going to happen in every city. We'll have a pocket and we'll have a community that will connect them to the larger US space network. So it's just a matter of time. And that's where I want to spend most of my time, is working with those entrepreneurs.
How underdeveloped of markets are you looking to get into? Are you looking at the Austin, Columbus, Denvers, or are you looking at the Tuscaloosa, Des Moines, Boise?
All of the above. I think Denver is actually pretty well, Colorado, let's say, because Denver and Boulder I think of as the same ecosystem. The amount of new funds that have popped up is awesome. And the amount of later stage capital that's coastal that's now circulating in Denver, I would say that, it's going to continue to expand, which is great. So certainly it's my backyard, like, in Austin too, like I have relationships there through the Galvanize network. But I want the new frontier, which is going to be the next, if I'm looking at, what our next fund cycle will be, it's going to be the next deployable, 3-4 years. So who's developing in 3 or 4 years that's going to give you interesting and new returns? That's just how it goes.
Any hot takes on favorite markets?
I really like Minneapolis right now. It's interesting because I think the environment is certainly ripe for some activity. You've got some major companies there. And just like a Seattle, where you have people churning off of some of those larger companies with ideas, it's obviously easier now than ever to start companies very remotely. You can use that as your jumping off point to then go travel around, build relationships, come back, build your company where you need to. Everyone, I mean, that's just so normal these days in my perspective. So I think there's a lot of activity that's going to start happening out of that market for sure. And then this might be obvious, but Canada, and that's unfair to say it, Canada. But, from a US based investment perspective, I know that funds are obviously going up to Vancouver and Toronto, like a ton. But I just did a conference called Alberta Innovates in June. And it was the second year. And the amount of growth that happened between year 1 and year 2, really interesting. There's a ton of, it's very similar, or I should say analogous to a city of Denver, oil and gas, real estate. If you walk downtown, there's a ton of open office opportunities that, and it feels like Denver, Boulder in terms of Edmonton, and Alberta. I think markets like that will be really interesting as well, because the city wants it, the entrepreneurs want it, the family offices want it. So you have all the right DNA. And I think those types of environments where you're not fighting up against stream of people who don't get it. But now, the US is so supportive of startups as an ecosystem. I don't think there's any market that won't have the ability if it wants it.
I was at Inventures last year in Alberta and was blown away by how clean and like affluent the city felt. And I got the same impression. I talked to some folks who were like, this is an oil and gas town, and we're realizing that we can't be an oil and gas town forever. And so I felt that shared will too. Question I had for you, you're going early stage and you're going into undeveloped markets, which to me just sounds like you're asking for more and more risk. And with the history that you have, it seems like you don't necessarily need to go into the riskier zones of investing. Why have you chosen for Upslope to take on this extra risk instead of saying, we're going to be a Series A or a Series B firm?
Yeah, but there's so much money hanging out at Series A and Series B. It's not my jam. And that might be a casual way of answering, but I'm just really good at the early stage. I like it. And I think every VC has a thing that motivates them. It's such a psychological career. And I think when you're evaluating, this is probably where my English degree comes into play. When you're evaluating teams, it's essentially you're evaluating people, you're evaluating fictional characters based on reality. And to me, I love finding something, like it's treasure hunting, find something undiscovered. No one else wants to trust it yet. I'm like, oh yeah, I'll do that. Because that's honestly what we did at Lear. A lot of times we weren't looking for external validation. We were using our own know-how, gut, and also network to build it up. So like I was the first institutional investor in Billy, the Dollar Shave for Women, out of Denver when they had a ton of New York connections. But I also had a thesis around that area for probably 2 years and told a bunch of venture friends. And I was like, I want to do Dollar Shave for Women. Someone send me all the teams you're seeing that are doing it. Like this has to exist. I think it needs to. And met Jason and Georgina, and I was really pregnant, about to deliver my first baby. And it was just kind of a done deal on our first phone call. I don't think I met them in person until like my kid was 6 months old. But I was like, yeah, we're doing this. I don't care like where you are, we're doing it.
Is that how you generally think about potential investments, where you formulate a thesis and then look for people that fill that thesis? Or when you're treasure hunting, are you looking for people or a team or a market? Like how do you kind of come to an investment?
It's all the above. I think you have to be, like we were talking about, with the creative, you have to be open to things just falling on your plate, like within an hour. Oh, this round's closing. All these great investors are in. Like, that's every family office's dream, is to be invited into an exclusive round for some reason. And even like an early stage investor, right? I didn't have to do any of the work. Like, the terms are set, great lead, cool. Like, I'll be it's the least heavy lifting I have to do. Love to do those, but it also doesn't really demonstrate my ability to take something that no one else is seeing and build it up, which is essentially the job of a early stage investor. And how, we did that at Lear multiple times. So that gains confidence. You know how to run syndicates. Like, you kind of grow into the role of leading. So it's all the things, right? Certainly when you're evaluating an early investment, it's largely team, it's largely the space, but the biggest thing that no one can factor in or have anything to do with is market timing. That's, to be honest, like, as much as all these things have to line up, it's so crazy when people tell their stories about how they invested in this kind of company, and they're lying if they told you they knew it was going to happen. There's no way, we could have a market downturn tomorrow and that could crush all these early things that we're betting on, given where the market is today, public and private. So I think it's just a little bit of, licking your finger and holding it up to the wind and saying, like, I hope this works. And a lot of it can be manufactured relationships at the right time. There's trust, but, it's also rolling up your sleeves too. So it's great to have warm introductions. It's great to evaluate the team. It's great to have a wide open sector. A lot of firms will say they want to find the new category creator. I think that's probably where commerce is today. It's if, like, you can't do like the Warby Parker of deodorant anymore. Like, that's not going to get attractive VC funding. So what's the next category creator that's really going to impress people and push a sector like commerce to the next level? So there's all those components, I think, that go into it. And for early stage, especially, it's tip of the spear. As much as I try to be formulaic, like, it's always going to be really fluid. So I have to be open to a lot of different ways that something would come to me. In a perfect world, I have multiple theses for, the fund. But honestly, that stuff sort of like wakes you up in the middle of the night and you're like, oh, what if, and it's just how much time I would have to go down a rabbit hole and explore it and push it.
You said you try to be formulaic. Do you have a rough outline for that formula?
For sure. And this is like the art and science, right? You can be incredibly formulaic and have a whole strategy of how you're going to deploy the cash and what sectors. And I do that just to ease my own anxiety. But it all goes by the wayside because, again, market could tank, like, it could do well. You could find something that is way outside your strike zone in terms of price. You have to do it because it's one of those beautiful rounds that you wouldn't want to miss. And so it's as much of, okay, here's my best case scenario plan. And then you have to be able to just go with it when it comes through, because those rounds are not replicated easily. And if it doesn't fit your thesis, it's just a thesis.
What's the biggest thing that's changed in how you invest now versus how you invested at Lear Ventures?
Competition. The private market is massive now. There's so many players. We started Lear Hippo Ventures, or Lear Hippo now, when funds had frozen their assets. Like, they were not deploying cash in New York City, and San Francisco didn't care about New York yet. So if you were 2-3 guys starting a company, our first check into Venmo was like $25,000. Like, it was, because they didn't need very much and they weren't raising a ton. I don't see rounds at 750 seed anymore. Like, that would be a friends and family experiment, and we're now seeing multiple seed rounds. One of my seed rounds was like, the post was 50 million. That's insane. That's like a B round. But so it's hard to use this terminology because it doesn't equate. I think there's sort of a set price for the middle of the country and then like set prices for the coast. But the private market's so jammed now. There's so many players. You can see these rounds you look at the cap tables, and there's just so many new firms. It's now like celebrities are becoming VCs, which I think is great because they have different expertise, but it's a different dance. and finding the right groups to back that company who are going to be well suited to take it to be successful is just more complex though.
We also see this proliferation of a lot of micro VC and a lot of very like thesis specific micro VC. We're investing in exactly this type of company, which means that kind of categorically they're not being open to things that you're saying you have to be open to. And a lot of them don't have this history where in the late 2000s, early 10s, they were investing in things like Venmo. So do you see them as a threat? Are they putting like dumb money into the ecosystem? Is that a problem, or does it not matter?
I don't think it matters because there's so many different types of companies out there that I really like that there's different offices for cash. If everyone needed to pitch Sequoia in order to be validated, that'd be unfortunate because Sequoia has their own thesis. Yeah, I like the specific sectors. There's a cool fund called Lever that's only investing in alternative meat sources, which is like, great, I know what to send you. And they also know how to vet a company like that in a way that I don't. So I would enjoy partnering with specific micro funds just because it's kind of like everyone's got their own swim lane. And I think I do that for firms that are traditionally SaaS that might not have faith in consumer, just because that's something, I don't exclusively do consumer, but I think that's where I would lean on a fund when I do an aerospace deal that's more aerospace, so it gives me more diversification in my fund, which is what we look for as a generalist. But I would say something that I feel more comfortable in is consumer myself, if that's the thing that VCs are looking for me to help validate for them.
I guess one last question for me. Is there anything that we're not asking that we should be asking?
It's an interesting time in venture capital. I really like now that there are so many women a part of it. When I started out, I didn't even really know that I was in venture capital, right? Like I wasn't looking for my peers. I wasn't planning on a career. I was just head down doing the work. And I think in 4 years in, I met a couple women who were more senior than I was. And I was like, oh, okay, like there's some ladies. And we had a female partner at a fund of fund that had participated in our fund at Lear that acted as a mentor for me for a little bit in terms of like structuring our fund on how to be more buttoned up. That was nice, and so now fast forward, a friend of mine, Jessica Pelt and Sutian Dong put together the Women VC Directory. And I'm just thrilled that something like that exists. And there's so many women that we have a directory because I think it's necessary. And it's not so much like a gender thing, but I'm just psyched to be doing deals now that like I did an aerospace deal with another female partner. And like I can't believe that happened, that's so cool. And the directory is amazing because, I just got an email maybe 48 hours ago from a woman who's like, hi, we're part of the directory. I'm coming through Colorado. I'd love to, have coffee with you. And I was like, that's exactly what it's for. And of course I answer because I send those notes out to other women saying, hey, I have a question for you on this, or I have a deal that you might be interested in. And we're all in a Slack channel. And like, I don't have a network like that that's for people, so I'm just thrilled that Jess and Sutian took the initiative and put it together because it's great being in the middle of the country, having access to a larger network that's interested. And, gender might have been the sort of vehicle that got us there, but the activity is so robust that I'm just really impressed that that's where we are in the current market.
Awesome. Well, shout out to Jessica for connecting us as well. We appreciate her for that.
She is a super connector. I love her.
Kate, if people want to learn more about you or Upslope after the show, where should they go?
Upslope.vc is our website. You guys can hit me up on Twitter, or I'm just Kate at upslope.vc. Pretty simple, with a K, not a C.
Eric, one of our favorite questions is what sucks? And do you know what sucks about podcasts?
The fact that we don't know who's listening to us.
Exactly. The analytics in podcasts are terrible. And so I think I came up with a solution of how we can get a better feeling for who our listeners are.
Well, do tell.
All we need you to do, dear listener, is go to upside.fm/survey and answer a short 1 to 3 minute survey so we can get a better understanding of who you are, which helps us serve you better. We love feedback on the podcast, don't we, Eric?
Oh, we love feedback. all about the feedback.
All about the feedback. And so if you would humor us, please go to upside.fm/survey. Let us know a little bit more about you so that we can better serve you and make this podcast even better. That's upside.fm/survey.
We promise the survey won't suck. All right, Jay, we just spoke with Kate from Upslope Ventures. What did you think about going out west?
We've been kind of on a trend of going out west lately, and I'm enjoying it. It strikes me that there was this magical time in the late 2000s when a lot of people got really good starts into tech and entrepreneurship, and especially investing. You know, she mentioned a couple other investments they got into with Lair Ventures. Talk about a unique path into VC, as it seems we see a trend in it as well. A lot of people in VC don't know how they kind of ended up there, but they just did. Starting as Martha Stewart's executive assistant, then working as an executive assistant to Kenny Lair before the fund started. A lot of fortuitous timing.
You know, people say like, oh, there's this magical era of VC in Silicon Valley in the 90s, and then Boston was in the 90s as well, and in the thousands you have New York and Boston and Silicon Valley, and everybody who like was brought up at that time has these really unique experiences. And I often think about, I wonder if we're living in that for the rest of the country right now. Because it feels like there are more and more venture kind of expansions. There's alt VC. There's all of this stuff that's happening outside of those three areas now that isn't just refining what they created in the 90s, but kind of changing it, flipping it on its head. I mean, in Ohio alone, you're getting more and more venture firms. Chicago's getting more and more venture firms. Denver's getting more and more venture firms. And this is all kind of moving. So is it just hard to recognize because we're in this magical moment and we just don't really feel it? Or is it different somehow?
That's a cool take. I'm not sure. I think the main difference is, if you think about the late 2000s or 2007, you know, I think first iPhone was 2007. Think about how much has changed in the last 12 years, going from first iPhone to this proliferation of all kinds of software because it's so much easier to make and develop things now. Will we see the same proliferation of software in the next 12 years? Or will, you know, if you think about that phrase, software is eating the world, it seems like most of the low-hanging fruit of software innovation has happened, or so much has happened. Does continued innovation have to be in more regulated industries? Does it have to be in hardware? I just wonder if we ever reach the end of startups, pure software startups just making processes better.
Jay, when's the last time you were in a Fortune 5,000 sized office?
Boy, I don't know, probably the last couple of weeks when we were doing some film interviews.
Okay. And did you get to use any of their processes or systems?
No. Other than working through them to get approval for things like B-roll.
There are 70 publicly traded enterprise SaaS pure plays, some of which have been acquired since 2004. I think that there is probably 10 times the amount of value to be created just looking around the businesses that I've sat in, the companies that I've consulted for in my full-time job, and the processes that I hear from my friends that work at some of the Fortune 100 and 500. Every single kind of platform that's out there is probably $1 billion opportunity, like travel expenses and HR management systems, and none of that is broken into. So I think we're just kind of ticking the beginnings of what will be a huge push into software for corporations, because you're used to like Slack and Zoom and everything that you use in your like entrepreneurial focused life, and maybe that feels a little saturated. But my guess is that at larger corporations and companies, people don't operate with the same level of saturation of good, user-friendly, intuitive, well-thought-out developed products.
I think that's more of a pace of implementation and acceptance, though, than they don't exist. Like the two things you just named. There are some huge softwares playing in that space for corporations. Concur, Expensify, Gust, Zenefits. So I wonder, though, if it's just acceptance in those firms, because they're probably they're across the chasm in terms of adoption curve. But yeah, I don't know. I'm probably a little bit too doomsday on it. It just seems that, in the early days when there were not distribution mechanisms for getting your product into users' hands, pre-App Store, there was so much more opportunity to quickly get in front of people. And now either that opportunity is taken or you are up against so much noise. And so I really look at people who were able to come up in the late 2000s, early 2010s, getting experience with these upstarts and some of the first classes of Y Combinator and things like that, I feel like that is a incredible mint year or bottle year. What is the year of, what's the relevant year in wine terms, Eric?
Vintage.
Incredible vintage year to come up in VC, and it seems like Kate hit that.
Yeah, I would agree. She's definitely been around for a lot of the magical times in the United States venture capital history, specifically early on in New York, which is pretty cool.
I like your point, though, about enterprise software. So maybe we'll get an investor on the show here to talk about enterprise SaaS and what that landscape looks like.
Yeah, that would be awesome. I think just one final point I want to make on Kate and Upslope. I like that they're kind of playing in this one field where they're like, hey, we do early stage and that's what we do well. Kind of like what Benchmark does. They found their niche and they stay in it. Upslope found their niche, they're staying in it. They're not going to move up Series A, B, C, and all the way up the chain.
And the way she phrased it when I said, it seems like you're inviting a lot of risk that with your track record, you don't really have to. And she was just kind of the mind of, well, that's what I find interesting. And I don't want to do anything else, which is bold. I like it. You know, you and I talk a lot about all this specification of venture firms to form theses to go out and raise on. And she said that's a positive for her because she knows where to send people. But it seems like she does not want to go and start one of the specific funds. And I still wonder the viability of those funds long term. All right, guys, if you have thoughts on this episode, you can email us hello@upside.fm or tweet at us at upside_FM. And we'll talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter @UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming.